Greetings, Algo artisans. Massive day in the markets tomorrow. Perhaps one of the biggest market days of the year. And the big question is, how is it going to affect the price of things? And of course, on this channel, a lot of people are probably interested about Bitcoin. So let's jump into the data right now. Okay, so we're looking at the economic calendar, and tomorrow at 8:30 AM EST, we see the core CPI, all of the inflation data is coming out. It's actually the consumer price index, month over month, year over year, and it happens once a month. And this right now is the biggest conversation because the Federal Reserve is what sets interest rates, the prime rate, and all interest rates on all loans created are based on the Federal Reserve's prime rate. And that rate is changed and manipulated in order to try to manage inflation, which is one of the dual mandate of the Fed. So it's the main tool that they have at the Fed to keep inflation under control. Because of the trillions that were injected into the economy back 3 or 4 years ago during the pandemic, and just because of the way that money is created in general, we're starting to see a lot of inflation. So Jerome Powell hiked up the rates over the last few years, continued to hike them, and the rates went from basically 0 all the way up to 5 and some change. And they've held it up there for quite some time. And so the idea here is that if the interest rates are high and money is expensive to borrow, then not a lot of investment happens because the vast majority of investment is from borrowed money in this economy, nearly all of it. And if it's not from borrowed money, it's backed by borrowed money, and it's made allowed to happen by borrowed money because everything runs on debt in the current economy. So the higher the rates, the harder it is to push markets upwards. However, markets have continued to head upwards. So have the prices of many goods, and that's what this CPI number reflects. We can see the numbers from last month here, and we're going to take a look at what the numbers are tomorrow. As soon as that comes out, and it's going to be very early, there's going to be a lot of volatility in the market. Now, there are some clues as to what might happen with this, and we're going to jump into that very shortly, but let's move on to what happens at 2 p.m. EST, the federal funds rate, FOMC economic projections, and the FOMC statement. And this is where Jerome Powell gets up and says we're going to either keep rates steady, hike rates, or cut rates. Most people are expecting not a cut yet. They're expecting keeping them steady. The European Central Bank, as well as the Central Bank of Canada, both cut for the first time in a very long time last week. It may be that people are expecting the Fed to possibly do the same, but what I'm reading as far as the projections in the market are concerned, they're not pricing in a cut until maybe September. So it is right now expected that the rates would stay the same according to what the market is saying. Doesn't mean it's going to happen. However, I doubt that in the current environment, they're going to cut the rates. I don't think that's going to happen. I don't think enough things have broken yet. I think they want to see things break so that we can tell that the economy is slowed down because of these higher rates. And until we see more things break, like perhaps having to save some banks from going under, which of course that happened last year, we haven't heard as much of that lately. There are some banks they're concerned about, but we haven't had any big news about any banks needing to be rescued. Not any big banks. That being the case, I'm expecting the rates to remain steady. Now, what'll happen here, and of course in the press conference afterwards, you're going to see a lot of talk about what's coming, what may come, guidance, and a lot of the things that Federal Jerome Powell's going to say will be sort of microscoped and heavily analyzed and dissected to try to get an idea of what will happen. And the prices of everything, especially in the Forex market, are going to run around wild during that whole conversation. And then once that's over, it should regain some kind of normal behavior. Now, depending on how heavy the surprise is, if there's a surprise at all, the market should kind of come back to normal the next day, maybe later that night. It really just depends on whether or not like the CPI is at expectation, which is forecast to be 0.3 for core, 0.1 for CPI, 3.4 year over year for the year over year CPI, and whether or not the Fed funds rate is going to be held at 5.5% or that changes. So if it doesn't change or if it meets expectation, then the markets will probably come back to normal. And if there is a surprise, then the market's going to do what the market's going to do. And I don't take trades during this time. Actually, generally, I take a day off. I might sit in front of the machine and get some scalps or something like that. For the most part, I take days like this off because the market's not predictable. It's really not predictable. Even if the number comes out as expected, the markets may do things that are not expectable. So let's take a look at some clues as to what might happen here. Now, this is the US FX wrap for Market Squawk over on Zero euro hedge, and it says the dollar was initially firmer in Tuesday's session. That's today. It says here further in the article, attention for the dollar lies on US CPI, the Fed's rate decision, and Fed SEPs on Wednesday. Money markets are currently pricing in a 60% probability of a 25 basis point rate cut in September, an 88% chance of a cut in November, and is fully pricing in a cut by December with a 56% probability of a second cut later. So you're looking at, according to the market, September, maybe November, we might see some cuts. There probably wouldn't be anything in October, I'm imagining, because of the election. They don't want to disturb anything and make the markets go crazy in October. So I'm assuming that's why October is not on that list of probable cuts or anything like that. But that's the expectation. So again, this is telling us that there's a good chance we will not see cut tomorrow. And you might see a hike, who knows? But with the other central banks cutting, a hike would be a bit of a surprise. But you know what? Surprises happen. Let's move on to the charts. So here's Bitcoin, and this is a chart we've been building for quite some time. We have a consolidation inside this rectangle going back to early March and then up to modern times. We had this move up that I called and predicted out. And a lot of people saw the Bitcoin market fall yesterday and today. Pretty decent move down, this very long candle. It's a little dramatic in the short term. It's not that big of a deal. And I did tell people this morning that a lot of range traders probably would just buy down here because this essentially has created a range. And that seems to be what's happening, is that you have a lot of people buying this little dip right here. And if you look at Bitcoin, there doesn't seem to be a ton going on between this rectangle and this rectangle right here, right? It just doesn't seem like a lot's happening price-wise. There's not a lot of price action until you go back until April. So talking about a couple of months ago before you see that. So price may be sort of repelled from going into this area. So I believe if price were to head down and break this rectangle right here, it probably would run down into this area to grab some liquidity and probably bounce off the bottom of our higher time frame rectangle consolidation that we see here. For the moment, Bitcoin is at a support. If there is a rate hike, then that would be a bit of a surprise. I think Bitcoin might actually take a hit, head down towards that 60, maybe down towards that 60,000 level. We'd see. It might not. You know, it's just a lot of times with these announcements, the money just kind of waits on the sidelines until the announcement just to be safe, and then it goes back in. So if there isn't a rate cut, there's a decent chance this could head back up towards the local highs. But at the moment, according to the algos, it could go either way. It could head down, it could flip, or it could head back up. Higher time frame algos do still look pretty bullish, but again, up against resistance. So we're just at that time after the Bitcoin halving where there's just a long consolidation and price is gathering steam, most likely to head back up. And until it does, price is going to range in any of these boxes right there. And again, I think the most likely move right now is for price to probably head back up towards this high. But again, it could drop out and not do that. It may grab some liquidity from down below, just like we said. Now let's take a look at the DXY, because that's actually key when it comes to everything trading. Everything trades against the dollar. Okay, so what you want to know is the strength of the dollar compared to other currencies. Now I can tell you right now, just by the look of this chart, and this is on the daily, in the short term, the dollar wants to go up. It does. It wants to go up against all these other currencies. But again, according to that news article, it's not that the dollar is strong, it's that the other currencies are weak. It's all relative, isn't it? But I can tell you on a lower time frame, this look right here is actually pretty strong. Okay, so whether it's because the euro and the Canadian and other currencies are part of the mix here, whatever the reason is, this look on the dollar is a pretty strong look to be heading up here and then heading up in this stair-step fashion. Now there is resistance with which it must contend, and in the end, the dollar is still part of a massive consolidation where price is just kind of bouncing back and forth and ranging. So whatever it does now on the higher time frame is probably not going to be that meaningful unless it can break above 106.45. If the DIX can break above 106.45, I'd imagine a rate hike would cause that. I don't know that a rate skip where nothing happens would cause that, but again, I do expect no matter what, as soon as that announcement happens tomorrow, there should be a lot of money flowing back into the market. And again, there is going to be a stock buyback blackout coming on Thursday or Friday. So a lot of your moves, like you saw with Apple, those are no longer going to happen as likely to happen anyway. Anything can happen, but those type of moves are not likely to happen. You take a look at this session today, this actually is the result of massive buybacks. I think it's one of the biggest buybacks that we've seen in recent times with Apple. And Apple actually is the king of U.S. stock buyback companies. And the way buybacks work is these companies issue corporate debt, and they sell that debt, and they use that money to buy back their stocks and hike their value. So they're not really improving their company any per se. They're just messing with their balance sheet and making profit in the stock. So things like this after Thursday and Friday are not quite as likely to happen outside of some kind of major R&D breakthrough or something like that. This is what we're looking at, just kind of ending for this week and for until those buybacks come back on. So just a quick look at the general markets. I don't want to forecast too far. I want to see what happens with the FOMC tomorrow. And again, there will be no videos tomorrow, maybe not the next day, but I think I'll be back on Thursday. So in the meantime, I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times and been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
This is ThinkFree's Algo Factory testimonial. I began my prescription for Algo Factory the summer of 2023. I am now 70 years old, and I have set a goal to have a supplementary income by learning to trade. I have been putting in about 3 to 4 hours per week of study time. In spite of this small time of commitment, I am determined to learn to trade. I set a goal of slow, steady progress in my learning. It is now March of 2024, and I have been delighted that through the articulate speech and hands-on help and support from Cowboy, I have developed an algo that looks very promising. I've come to appreciate Cowboy's remarkable ability to communicate and teach. He's not just knowledgeable, but also very creative in his shoot-from-the-hips approach. I wonder, is that where the name Cowboy came from? I have followed the Algo Cowboy and V the Guerrilla Economist for more than 3 years, and have found them to be very respectful, caring, and firmly rooted in reality. By that I mean they have a clear, deep, no-nonsense understanding of the world we live in, not just in trading and economics, but geopolitically and, dare I say, spiritually as well. For me, this fact makes working with them all the more gratifying and secure. This has and continues to be a great investment of my time and money. Also ends up being fun with the humor that is shared amongst our Algo Factory group members. Thank you, Cowboy.
Don't forget, algofactory.tech. Trade your job, upgrade your life. We'll see you on the next one.